If you look purely at the news, you would be going and hiding underneath your bed. Traders brace for volatility with US debt deals still elusive. However, when we look inside the structure of the S&P 500, we get a completely different view. This is why it's so important as a trader and an investor to have your 3D risk management. You know what you will do if price goes down, goes neutral, or goes up. And you understand that the market pays you for synchronization. It doesn't pay you for anything else. What is synchronization? It's the ability to understand multiple charts and where they are probabilistically heading. There are so many charts out there. How do you prioritize what you look at first? Always look at the tier 1 charts because they move the markets. They move global markets. These charts, S&P 500, the Nasdaq, the VIX, the DXY, Bitcoin Gold, US oil, junk bonds, and the US10Y are vitally important to understand if you're going to synchronize, and you're paid for your synchronization and nothing else, literally. At the top of a bull market, the news headlines are undeniably positive. At the bottom of a bear market, the news headlines are undeniably negative. This is why you must look past the news headlines and into the charts. In this video, we're going to go through some of the tier 1 charts, looking at the up and down levels, the immediate ones. XRP has also been in the news. We're going to look at the SZs on that. Stay tuned, it's going to be awesome. Hi everyone, I'm Ken from Crypto Trading KS and the inventor of the CTKS method. If you're new, a very warm welcome and welcome back, CTKS family. My goal is to assist you to become more of a financial and emotional blessing to yourself and those you love. If you would like to know where smart money buys and sells, please subscribe. Let's run the numbers. Recapping the main markets, over the past couple of days, we've seen the VIX come down, but it's trying to get up there. You can see we broke down underneath support, yet the VIX potentially is turning around. Just keep your eye on the VIX. The Nasdaq has been doing incredibly well. It had a bit of a blow off top there. It's just retracing a little. Bond prices are moving inversely to bond yields. With the debt ceiling crisis, yields have been exploding higher. Why is that? Because there's just more risk inside the US financial system, especially after all the banking crises. What about the DXY? This is often observed as a flight to safety. We've seen the DXY come up and yields come up. What does that do to gold? Gold does not like when yields and the dollar go up. It typically moves inversely, and I say typically because it's not a law. We can also see that oil is getting over resistance. Before we get into the CTKS method analysis, it's important to gain an overview, a perspective on where markets are going. Nothing is more beneficial than looking into the top tier crypto projects. They give a lot of indication if risk on or risk off is in the system. We can see Bitcoin currently selling down. What does this mean? It means the alts will be selling down as well. Also take note, when Bitcoin sells down, the alts can sell down far more in percentage terms. When Bitcoin comes up, we expect the alts to come up much more than Bitcoin. We're looking for relative strength and relative weakness. If Bitcoin is weak, it may mean that the major market indices are experiencing risk-off behavior. You must look at crypto even if you're only inside the stock market. Bitcoin is the center of gravity of the crypto universe, but the leading alts give you an indication as to how Bitcoin could be weakening or strengthening. We can see XRP weakening. And what is this all about? When we get an overextension to the negative side, and you can see it playing out on this chart, it means that Bitcoin is weakening. The risk sentiment is going down inside the market. These charts are for the past 24 hours, and beautiful crypto, it parties 24 hours a day, 7 days a week. It never sleeps. Pretty much just like us. Always remember that the way that you get paid inside financial markets is through your synchronization. How do you get synchronized? You must look at as many charts as you can possibly look at. And you need to look at them with the CTKS method because that will reveal objective dynamic market structure. With conventional technical analysis, people only look at the chart that they trade. No wonder they lose money. You cannot get synchronized with the market by only looking at what you trade or invest in. It takes decades to learn that you must look at as many charts as you can, but also look at the right charts in the right way. Looking at the S&P 500, we can see that the S&P 500 has support. It has a smart money buy area below it, around the 41.61 mark. This is quite a strong level. We can also see that the S&P 500 has a fresh air gap up to the next smart money sell level around the 42.65 zone. The S&P 500 is a tier 1 chart, fully explained inside the service. Members of the CTKS Method service, I released a video that covers all the tier 1 charts in depth, also explaining the interaction of the SLs. And there's a couple of interesting developments in that video. You should have a look. Bitcoin currently is 26,780. This particular area of support around 26,650 is not that strong. We have a much stronger one down at around the 25,900 mark. And there is quite a bit of smart money sell resistance ranging from between around the 27,800 mark up to 28,150. So just be aware of these levels. It's very important to understand the VIX. The VIX is the fear gauge of the stock market, but it's not just the fear gauge of the stock market. When people invest in stocks, they're likely to invest in just about everything else. The VIX was recently rejected by this smart money sell area around the 1726 mark, but it's coming into some fairly solid support around the 1666 mark. Please bear this in mind. We can see that the VIX has done a minor cut over. If this continues, we would expect to challenge around this 1730 mark. Please let me know in the comments, what do you think this would mean for the major indices, the stocks and crypto, and of course gold as well. The DXY has made its way into a smart money buy zone. It's exhibiting a little bit of weakness, but that is where the buyers will be found. We could potentially see a bit of a kick up in the DXY. That would also support the thesis that the VIX could be going up. CTKS Method service elite members know what this means, and they know the strength underlying these SCs. Gold is currently 1980. We can see that there's a smart money sell level between 1982 and 1985. What we also note, if the VIX starts to spike, the DXY finds support in that smart money buy area. Gold is likely to get pushed down and rejected around that 1985 mark. Where would the next level of support be? It would be around 1972. If it fails to hold that level, the next appropriate support level would be around the 1961 mark. We can see there's a confluence of buy areas underneath gold's price at the moment. You must read all the tier 1 charts interdependently. We can see that the US 10-year yield has been caught in a smart money one sell area. It's trying to convert it into a buy area. If we have more debt ceiling crisis talks, we could expect yields to spike, the VIX to spike, the DXY to spike, negative pressure and momentum to be placed into the indices. A lot of people would say, Ken, why is that important? I just trade XRP or I just trade Tesla. Those tier 1 charts just don't interest me. Well, they should, because if you understand how markets work, all markets are emotional by nature. The price chart is alive with emotion. That emotion spans millions of participants globally. We also have to understand objective dynamic market structure, and that's why the CTKS method is there. We can see that Tesla currently 180.11 has overhead resistance in this 184 area. If the VIX spikes, yield spikes, the DXY spikes, gold will get hit and the major indices will come down. What is a component of the major indices? Yeah, Tesla is. If the major indices are coming down, there's a very high probability that Tesla will come down. The next smart money area of support is down here around that 166 level. You must be aware of how markets are interdependent on each other. Many traders and investors tend to exit the market exactly when they should be entering. We don't like the red, but that's exactly the point of time where you dollar cost average in at optimal levels. But you must know what you're doing. Looking at the greatest gainers, in the past 24 hours, Render Token, Tron, Ape, CRV, Litecoin, GUSD and HT. The greatest losers, top 100, past 24 hours, Pepe, Injective, AGIX, Theta, GMX, SUI and STX. Inside the CTKS Method service, you get the levels. Inside the masterclass and certification, you get the knowledge. The two are very, very different. When looking at XRP, which is currently 45.93, if you're new to the channel, a very warm welcome, and you might notice these gold bars. What are these golden bars? They're called Standfield zones. Underneath these SCs or Standfield zones, there are SLs or Standfield levels. What are SLs? That is where structurally ODMS, Objective Dynamic Market Structure, is playing out. And we mark up a chart from its inception. We never do recent indicative price or RIP, and we don't do SBA. What's SBA? Story-based analysis. We look purely as scientists at the financial markets. Many people think these are just normal support and resistance lines. They are not even close. When you look at an area like this, it takes a great amount of knowledge to actually mark these charts up. What did we see with XRP? It was trying to get through this smart money sell area, this SC, and it just got forced down and forced down. It did a bit of a fake out before it attacked this. It drew the shorts in and then liquidated them. This is why these big candles come into the market. We managed to get through this particular area around the 4400 mark. Then what happened? We had another smart money sell area around this 4550 mark. What do sell areas do? They tend to push price down to the closest buy area. When you get momentum, it tends to go up to the closest sell area. If it gets through it, it's on its way to the next sell area. But if it doesn't get there, if it gets these long wicks, these rejections, it will get pushed back to the next smart money buy area. Price is always pinging between SCs and SLs. How do we get more synchronized in with the market? Because it can be a challenge. The first thing is to understand how the chart you're trading relates to the Tier 1, Tier 2 and Tier 3 charts. These are the current charts that are shared inside the service. The service has just started. We've also added Google and Matic into the mix. Many more are coming. If you're trading or investing in XRP, you should be thinking about this. If the VIX spikes, the DXY spikes, yield spikes, what would potentially happen to XRP if there's not a flight to safety? And under these conditions, it's most likely not going to be a flight to safety. XRP could come down and try to find support around this 43.85 level. If it can't hold on to that, it's going lower. Inside the service, all the monthly levels are released. If XRP finds support around this 45.50 mark, it's going to come up and challenge the 4800 mark. You must always be aware, price is always pinging between SCs and SLs, especially the clustered ones. You can imagine how difficult it would be to trade XRP without knowing objective dynamic market structure. You simply wouldn't know where smart money is leaning in and leaning out. Smart money and algorithms, same concept. The CTKS method reveals where the algorithms are going to be active, either on the buy side or the sell side. The beautiful thing is that you can learn how to do this for yourself, either inside the ctksmethod.org or inside the masterclass. The masterclass is for knowledge. The CTKS method is for the certification, the levels. Trading and investing are serious businesses. You must have your foundations before you can effectively get synchronized in with the market. You must understand what the markets are doing, then how to identify opportunities. But before you buy or sell, you must master emotional control. If you don't master your emotional control, fear will master you. And fear is a terrible financial advisor. It will have you selling and buying at all the wrong spots. You become entitled to profit when you have the knowledge and emotional control, and never beforehand. Many people think that they don't have to put the hard work, effort, and energy in. The markets will simply pay them. This is fantasy. There's no shortage of people telling you that it can all be easy. It is not easy. It requires hard work, discipline, and commitment. Mastery of fear is incredibly important. That's a skill that will impact positively your entire life. That's why we have the CTKS Creed. As a community, as a global family, we are dedicated and committed. We either win or learn and never blame. And we always solve our problems with positive excellence. It's also incredibly important to every day show kindness, integrity, and gratitude. Happy 900th video anniversary, my friends. And in 2 days, actually, we're going to have our 2-year anniversary of the YouTube channel. Wow! We have such an incredible global family. It's just an honor to be here each day for you and to walk this path together. Wishing you a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.